Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video. Hi everyone. In this video we are going to start a new chapter called Internal Reconstruction. Now this chapter may be in your third sem or fourth sem, okay, depending upon your universities. Now this chapter is considered to be one of the most difficult chapter in corporate accounts, but let me assure you that after watching this video you will say this is one of the simplest chapter. Okay, now first let's begin by understanding the meaning of these two terms, internal and reconstruction. See, internal means within something, yeah, internally we are doing this internally, yeah, within something. So internally, now here we are talking about companies, right? This is corporate accounts, so we are talking about companies. So internal means within the company, all right, within the company. And reconstruction, now what do you mean by reconstruction? Reconstruction means to rebuild something, to reorganize something. Now only construction means to build something new out of nothing, yeah, you are building something new. But reconstruction means something already exists and you are just reorganizing it, you are just rearranging it. Okay, that's the basic meaning of these two terms. All right, now let's leave the meaning and let's go ahead with the concept. Okay, we will see the concept in detail. So I will start off with an example. Okay, I will start off with an example. Now here, let's say there's a company called ABC Limited. There's a company called ABC Limited. Let's say this company ABC Limited, it started its operations in the year of 2014. It commenced its business in the year of 2014, and at the end of the year it suffered a loss. It suffered what? It suffered a loss. Then in the year of 2015, at the end, again they suffered a loss. Again loss. Okay, and in the year of 2016 they were hoping to make a profit, but ironically again loss. Same in the year of 2017. Okay, again loss. So loss after loss after loss. So they are continuously making losses. So this company is in a very bad condition, and one of the people in this company suggested that in the top level position that we need to seek help from some experts. Okay, we need to seek what? Seek help from some experts. So what they did was they went to a consultancy firm. Okay, they went to a consultancy firm and they asked them, why is our company making losses after losses? Now the consultancy people, first they asked them to show the balance sheet. First thing they did was they asked them to show the balance sheet. That's what we do, right? If we want to invest something in any company, then the first thing we do is we check their balance sheet, the prospectus, and the financial statement. That's what we do, right? So the same thing the consultancy people did to analyze the company. So to analyze the company, they saw the balance sheet. Now here I have prepared a balance sheet of that company. See the balance sheet. The consultancy people, they saw the balance sheet. Now after seeing the balance sheet, they were shocked. They were shocked, and they told the ABC people that your company is literally sick. Your company is sick. It is in really bad condition. Okay, now the ABC Limited, yeah, we know we are making losses, but what is wrong with our company? So the consultancy, those people said, see, your balance sheet, it does not show a true and fair view of your business, of your company, because your assets are overvalued. Yeah, your assets are overvalued, and you have debit profit and loss account. Yeah, debit balance in the profit and loss account. That means you are in loss. Okay, and you also have this accumulated losses, this profit and loss, and this discount on shares. And you also have, the funniest thing is, you have the goodwill. How can you have goodwill? You are a loss making company since 4 years. Yeah, 2014 loss, 15 loss, 16 loss, also 17 loss. So how can you have goodwill of 2,50,000? How can you have that? You cannot have a goodwill. What is goodwill? Goodwill is a reputation of a business, the image of business, the brand in the eyes of public, in the eyes of investors and all the third parties, banks and everybody, right? That's the goodwill of a company. But how can you have a goodwill when you're suffering losses after losses? That's not true. Your accounts are completely manipulative. Yeah, it's completely manipulated. This is window dressing. Yeah, that's what we call in the accounting, window dressing, showing more favorable position than what it is. That's the thing about this company. You have goodwill. How can you have goodwill? You cannot have goodwill. And your assets are also overvalued. This machinery, it's not worth 2 lakh. The furniture is not worth 2 lakh. You haven't depreciated your assets properly. You are showing them at their close to original cost itself. Yeah, that's not true. All these assets are overvalued. That's a problem here. And you have all these accumulated losses and you have fictitious assets. Now what do you mean by fictitious assets? This goodwill is there, patents are there, trademark is there. Yeah, these all virtual assets. Okay, so all these virtual assets are called fictitious asset, goodwill. So how can you have goodwill? You cannot have goodwill. Okay, that's the thing. Now this all needs to be corrected. The consultancy people told them. And then you also have here in the liability side general reserve. How can you have general reserve? You haven't seen a single penny of profits all these years. How can you have general reserve? What is reserve? General reserve? General reserve is created out of profits, right? Out of past year profits. But you haven't seen a single profit, single penny of profit. So how can you have general reserve? That's also a complete manipulation of accounts. You have made over here reserve, and then to compensate that on the asset side you have shown the goodwill 2,50,000 so that it can be compensated like that. So it's complete manipulation of accounts, right? And you also have borrowed a loan from bank at the rate of 16% per year. 16%. How can you have 16% bank loan? That's really bad. And also you have debentures of 18%. That's also very high cost of debentures, right? How can you pay all these interest when you are not making any money? You are in complete loss. So all these are the faulty structure and the faults in this company. Okay, so that's what the consultancy people told to ABC Limited. And this ABC Limited, now after listening to the experts, they told, now give us a solution that will solve our company and that will take our company on the track, on the back on the track. Okay, they asked the consultancy people to give a solution so that their company can come back on the track. Okay, from loss making company it can become a better profit making company. That's what they asked. That's what they asked to consultancy people. Now consultancy people told them, now before liquidating your company, before winding up your company, the last thing that you can try and try to revive your company. Yeah, try to what? Revive, to give a life once again. Yeah, to make it better, to revive your company. What you can do is you can go for internal reconstruction. To go for internal reconstruction. Okay, to go for internal reconstruction. Now the ABC Limited, they told, what do you mean by internal reconstruction? See, internal reconstruction, they told, the consultancy people told to ABC Limited that internal reconstruction means to reorganizing the affairs and the structure of the company. To do what? To reorganize. To do what? To reorganize. Okay, to reorganize, to reorganize the structure and the affairs of the company. Now how to do that? They said, first you need to revalue the assets. You need to do the revaluation of the asset. You need to bring them to the correct value as needed. All right, that's the first thing you need to do, the revaluation of assets. And the second thing that you need to do is to eliminate, to wipe out all the fictitious assets, all the virtual asset, like goodwill is there, patents, trademark, copyright, all these fictitious assets you have to wipe out. And you also need to wipe out the accumulated losses, like profit and loss debit balance is there, discount on shares, and so many other losses can be there. Okay, but here only two losses are there, accumulated losses and one fictitious assets. Okay, but I'm giving you more examples here. All right, So these two things they told: revaluation of assets, and then uh, this elimination of the fictitious assets, and the wiping out the accumulated losses. Okay, and then the third thing that you need to do is you need to do alteration or reduction in share capital. Okay, now these are the liability, right? You need to pay them back when the company winds up. You need to pay to equity shareholders, you need to pay to preference shareholders, right? But what you can do is to reduce your liabilities. You can reduce the share capital or alter the share capital. Okay, you can negotiate with the equity share capital holders, equity shareholders and preference shareholders to sacrifice their money. Okay, sacrifice their shares. And then here you see they have general reserve, right? So that also needs to be wiped out. All the reserves will be wiped out. And then you have to do a negotiation. You need to do a negotiation with all the third parties. The third parties like bank is there, debenture holders are there, creditors is there, bills payable is there. So you have to negotiate with them. Okay, now you would say, why would they negotiate? Why would they agree to accept less? Now by negotiation I mean that the creditors, we will talk with creditors to accept 1,50,000 1,50,000 instead of 2 lakh. Now you would say, why would they accept 1,50,000 instead of 2 lakh? See, the company is in very bad condition. It is about to die. It is about to go bankrupt and liquidate. But the creditors, they will agree. They will negotiate with us and they will accept lesser amount. Okay, all these third parties will agree. So we have to negotiate with the bank to reduce the interest rate, and we have to negotiate, maybe let go, maybe waive off the loan like a part of loan, and same with the debenture holder to sacrifice their amount and reduce the interest rate. Same with the creditors, same with the bills payable. Okay, we will negotiate with them. Okay, not like we will not force them, we will negotiate. We will talk politely and we will negotiate to reduce our liabilities. All right, the company's liabilities. That's the thing we will do, we have to do. Okay, first thing is revaluation of liability, revaluation of assets, and then the second thing is wiping out the accumulated losses and fictitious assets, and then reduction and alteration in share capital, and here negotiation with the third parties to reduce the liabilities. Okay, this is the concept of internal reconstruction. Okay, so that the company can come back on the track. From loss making company, it can be a profit making company, and all these people will benefit in the future. For now they need to negotiate, but in the future they will benefit if this company revives. Okay, come back from the track. This is the concept of internal reconstruction. Now why internal reconstruction is done? To bring the company from loss making to profit making, to take it back on the track. Okay, this is the complete concept of internal reconstruction. All right, easy, right? Okay.